Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it is Wednesday. Actually, it's actually Wednesday. I don't know. Maybe it seemed like this week was going slowly, but maybe it's not going as slowly as I thought. Coming over here, we're already got some movement going on in the treasuries. You can kind of see they're moving up here in the most recent action. Let's come and see where we're at overall. The overnight session. So it looks like there was a little bit of a decline and then rise back up. We did, yesterday end up just continuing up. So we had a bunch of central bank speakers. I don't know if they really said anything too important, but I do kind of suspect that some of the buying was because of that. And I'm noticing that it really seems like in the overnight session that the treasuries are almost always selling. So I think that foreign holders and so forth are still selling and are still a force. So that means that, we can have multiple flows we kind of have to keep track of sometimes, right? In order to figure out what our direction for the day or moment might be. S&P 500, a little bit higher today than it was. Nothing too big. Oil continues to fall. So it felt pretty hard yesterday for I don't know why. And it continues to fall overnight. Gold and silver also took a pretty big hit yesterday. I mean, we had seen this all kind of coming in the morning, and we blamed it mostly on the dollar, right? Well, here's Bitcoin had a big spike yesterday too, and it actually held it pretty okay. I guess that spike is not that huge, but I was looking for news, man. I looked and I didn't see anything significant, so I don't think that there was anything too big going on. It's just the normal shenanigans over there, although I would say Bitcoin is much more active, and maybe at the start of another bull run. Then we have the dollar here. Well, it's about where it was yesterday. It's 10 cents higher, 105.6. So that's basically where we're at today. Coming back over here now. We do have some ECB speakers at the bottom of the hour, and we have Fed's Powell at 10:15 Eastern time. Wholesale sells much later in the day, and a 10-year note auction today. Okay, so 10-year note auction makes things very, very interesting, right? Or we should see some very interesting order flow whenever we're having an auction. So, and will they be buying or selling is the question. Well, the auction yesterday went well, and I am anticipating that the auctions this week should go okay. So, of course, if it doesn't, if the 10-year auction is bad, then that's going to really shift everything around again. There was a very interesting story yesterday on Zero Hedge where they kind of went into the Treasury refunding announcement, and they kind of showed how the Treasury made it, more dovish than the market expectation, but that in the long run, it's not really dovish, that the government does have a massive amount of Treasury issuance to put out into the market that the market may not have the ability to absorb. So, I just was reading here in Discord, somebody saying that Financial Juice was having a sale. Let me look that up. Come on. I don't know how to get to their buy page. Why would you promote Zenith instead? That doesn't make any sense. I saw that, but I'm like, that doesn't make any sense to me. Oh, well, let's see here. Maybe if I follow the link in the video description. Oh, there it is right there. Let me introduce. Whoa, dude. Okay, that I thought when the guy said that what he said in Discord, I was like, I think you're misunderstanding it. It doesn't make any sense. No. It is an annual subscription for $99. Guys, that is a steal. If you do not have a news squawk and you do not take advantage of that, what are you even doing? I can't. That is criminally low. That you're basically getting 11 months of news squawk of a news squawk for free. That is nuts. Oh my gosh, what's wrong with Discord? Discord crashing on me. That's weird. Well, you know, it was weird because when I came in, Discord wasn't up. And I was like, why isn't Discord up? Maybe it crashed. Let's try it again. Yeah, look, so Zenith is okay, but I really did not find any of it terribly useful. They give you like a good discount to start out. I think like they give you like 150 for like the first 3 months or something like that. But like I loaded it up. I messed around with it a ton the first few days, but I ultimately did not find the information that I had access to in Zenith terribly useful, at least not for what we do. I think that if you bought their stocks package and you were trading stocks, it might be better. But like, I'm thinking about it because you know that there's going to be a lot of people out there that they don't have a news squawk and they're just going to be like, nah, I don't need the news squawk, and they pass up on the deal. And I feel like that if you pass on a deal like that, like, what are you even doing? News is such an important part of the market, and knowing why things are going and being able to make quick actions because you're getting that information first is like a huge edge. Well, looking at the treasuries here for the first little bit, not seeing a ton of like directional movement. There does appear to be a healthy amount of activity. I'd say pretty typical of a Wednesday. And the first little bit of action that we're having here seems to be a retracement of the up move that we've had just before the open. So I would not interpret that as the best opportunity kind of action for us, but there is, I'd say, pretty good, I would say this is pretty fertile ground, right? So we're not getting like evidence of a large meta order, but the overall market activity and the fact that it's Wednesday and everything else, I'd say says that this could be fertile ground. I guess the one caveat, the one thing that could hold them back is Powell. So let's come in here and look. I want to see what exactly is the nature of his speech. What is the nature of his speech? Oh, sorry, Wednesday. Chairman Powell speaks. Due to deliver opening remarks at the Division of Research and Statistics Centennial Conference in Washington, D.C. Okay, so that one may not be the headlining event of the week that some people might think it is. Just, a lot of people, they just see Fed Chair Powell speaks and they're like, okay, that's like the only thing that matters. He's delivering opening remarks at a conference that doesn't really have anything to do with Federal Reserve policy. It's for research and statistics. So he may not necessarily say anything about monetary policy or economic policy. It's kind of up to him, and I'd say that those ones Chairman Powell doesn't do that kind of an opening remark very often compared to the other Fed speakers, but often when the other Fed speakers do it, it's not they don't speak on monetary policy or the economy. So that one might be a dud. I don't think that if there are really large meta orders that need to be executed out there, and the big one is going to be for the 10-year auction, right? I don't think that they're going to wait until after Powell is speaking to do that. So I think we're okay on that one. But you are getting it first when you compare yourself with retail traders. Oh no, what are you talking about? We know for a fact that this volume. What is this volume? Nah. So when like big breaking news hits the market, you are getting it basically at the same time as everybody else. Because the way that this works is, so you're maybe getting it a few seconds later. So the way that this works is Bloomberg will send it out on the wire, and then the guys on the news squawk read it. Now, Bloomberg has their own wire, right? But he's just reading the same feed. So when you are using News Squawk or Financial Juice, Bazinga, what else do we got? Those are the only three that I don't really know. They're reading it out about the same time that you would hear it read out over Bloomberg. If there's a difference, it's only going to be a difference of like a second or two. And yeah. Now, there are some times where I will see a piece of news. So in terms of like the quality of a news squawk, okay? So just as an example, if a nuclear weapon was detonated in the Middle East, okay, when we would hear about it is probably the same time that every other trader would hear about it, okay? Sometimes, though, there are other stories that are kind of a little bit more under, what is the word? Under the covers? I don't know. One that not everybody realizes is significant. Sometimes you get a piece of news that is significant, but not everybody in the market realizes it's significant, right? And so you'll get like one news squawk will talk about it, and there will be a move, and then like the other news squawks realize it was a big deal, and then they'll report about it too, right? That sort of thing happens, and that's where like the quality of your news squawk, like Financial Juice, in my experience, hasn't been as good at identifying those kinds of ones and relating them to us as others would be. We would need to compare. Well, I'm just telling you how it works. Based on how it works, I wouldn't expect there to be a big difference. And I have in the past compared like News Squawk to Financial Juice. Okay, so, but larger picture, I've been using it for many, many, many years now, and I have caught many, many good news moves using Financial Juice. So, for what we need it to do, it definitely works. Now, I'm a little concerned that they're doing that deep of a discount. I'm a little concerned that they're having trouble getting people to sign up. If they're willing to give you a whole, basically 11 months free. That's you're getting a year for the price of 1 month. That's pretty wild, man. But again, if you don't have a news squawk, my gosh, for $100 for a year, you can definitely in a whole year find a news trade that you make that ends up paying for it. For sure. I just think that's such a steal. That is just like such a no-brainer. It's like a deal that like, it makes me sad that I already have a lifetime subscription because that's just such a good deal. I guess one of the things is that as of late, or let's not say as of late, in the Biden era, there has not been as much breaking news, right? When it was Trump, there was breaking news freaking every day. Trump would tweet something and I would see the tweets on Twitter and I would be one of the first people to be able to react to it. I remember that a couple of times where I was like, oh, what? Okay, I'll take that one. And then, like 5 seconds after I got in, the rest of the market figures, realizes it and moves too. Oh man. Some of the news trades we had in the Trump era were so wild. The Trump era really, really hit in this, how important news is to the market. In the Biden era, there's just not as much breaking news, is there? There's just not as much breaking news. The stuff that we get is more like, a central banker made a comment. That's like the biggest surprise news that we get these days. I can't really think of the last time there was a really big market moving piece of macro news. Like the last really big piece of macro news that I can remember was when Russia started invading Ukraine. And I wouldn't even necessarily consider that one like a breaking news sort of a trade either. But to the other thing that, well, I think you're totally wrong. If you can't make money without a news squawk, you won't make money either once you have one. You can absolutely make money just from trading the news. If you wanted to make money just from trading the news, it's probably better for you to go and trade stocks because you're going to get more breaking news stories with stocks, right? And then that's when probably you need a Bloomberg, maybe, but let's not say probably, but that's where a Bloomberg like is really, really valuable, right? But you can absolutely make money just trading the news. You absolutely can. And like the whole thing is like if you can't make money without a news squawk, well, I mean, people are doing all sorts of wild things that are never going to make money for them. So news is like the one thing that I think we can all agree you can make. It's possible for you to make money that we know moves orders and we know creates moves and that you can potentially take advantage. Of course, you got to be quick. So I guess there's a little bit of luck there and so forth. But I think we can all acknowledge that the market moves on news, right? But you did say it makes sense to me as an upgrade once you're able to make something. I think that's kind of like one of the problems is that to pay for like News Squawk or Bazinga, yeah, you've got to be pulling down a pretty deep, regular profit to be able to afford that. That most retail traders don't qualify for. They just don't. But for $99 for a year, for basically $8 a month, come on. No one who gets a news squawk changes to trade the news? Well, I mean, that's kind of what happened to me. Listen, the way that I trade... So, when was it? It must have been like 2019. I'm pretty sure that it was after the volatility crunch. So it must have been like mid 2018 that I got a news squawk. And the news squawk completely changed my trading. I remember there was somebody who was it? I want to say that it was like one of the old timers, like Octavius, or I don't know if Octavius wanted me to call it an old timer, but the people that are on the stream almost every day. And one of them, I was struggling and I was like, well, what can I shift over to? And one of them said the news. And I was like, well, that probably would be something that I could make money from. But like, I think in order to do that, I would need to have a news squawk. And I just couldn't afford the news squawk, right? And then later, so like I just kind of dismissed it essentially. And then I got the news squawk and started trading with it. And it was the Trump era. So like Trump was, there was wild stuff happening all the time. And I caught some of my best trades ever. I mean, really, some of my best trades ever were the news. You can go and look at that video that I have where I talk about trading the news. And I talk about, several times where it's breaking news or basically things where I'm listening to the news squawk and making interpretations of, and were my best trades. And I show you the trades. Some of them were sim, but a bunch of them were live as well. It completely changed my trading, right? And I think that it was largely because I started to think more about what is actually driving these orders. Because before that, I was looking at levels and stuff like most people do. I was like, oh, there's this price level, and maybe if they break through this price level, then I'm going to take a trade or something, and then I do it, and that's like exactly where they would flip around, so that I would try and reverse it there, and then they would just plow through them, and I was like, oh, this isn't really working, right? It was all like technicals, and once I started really focusing on the news, I kind of started to realize that, like some sort of line on a chart doesn't seem to be a very effective predictor of orders, does it? Like the only time that those sorts of things work is when there's not a lot of activity in the market, essentially. So it completely changed my trading. So I don't think that it's added edge at all. I think that it's like one of the first things that you do that can kind of get you to break even or close. That can get you on par with the rest of the market to even give you a chance to go and find like the real edge that's going to put you on top. So, you know, if you're a beginner and you have some money to spend and you're looking to improve your edge, the new squawk is the first thing that I would go and I would get. Most people, they go and they buy another indicator package, and you know, usually that's not going to do a whole lot for you. I guess if it's my indicator package, that's a little different. Mine's only $100. But I see people go and buy $1,000 indicator packages, and it doesn't do anything for their trading, you know? Or they go and they buy a course, right? I would buy a new squawk before I'd buy a course. Fui? Morning. I'm getting a lot of names that I just don't know how to pronounce, so I apologize. But thanks for dropping in and saying hi. Under the radar. That was the phrase that I was looking. Dan, you're so great. You know what? Yeah. So I think that there was another person named Dan Trader that was here before, because when you came in like a few days ago, you kind of suggested that like you were new to the stream, but you've made good comments. I'm glad to have you. Where are we at, by the way? Yes. Okay. So I was thinking about how they had stepped up to the 01 half, but they didn't quite go that time. It's kind of hinting that they might want to, though. I think that the biggest flow we need to think about today is the auction. Now, I think that I have a lot of speculation about the auction, right? I'm kind of speculating that I think the auctions might be good, but I think that that's probably like the minority situation, potentially. You know, like the larger thing is that there's a lot of issuance out there, and so a lot of people might treat it as a bearish event. But let's see, because I say that I like his hair. Oh. to be honest, oh man, see, guys, don't be like this. I compliment one person and you're like, oh, how come you didn't compliment me? I can't compliment everybody. I can't. I have noticed you there, Tom Gunn, but I can't at this point remember what you said yet. now I'm going to remember that Tom Gunn is the guy that I need to praise a little bit next time he says something cool. I was like, appreciate. I'm happy you. Oh, thank you so much, because that's really what this is about, right? To some extent, I mean. I think that me trading well is good for the community overall, okay? But I do put the community before my own trading often, right? So that people are finding this and finding it useful, and particularly finding a community. Because there's some people like Lucas. I feel like Lucas disagrees with me more often than not. But he comes around, which says to me that he does get some community from it, right? So that means we're still doing our job. Yeah. And it's a small community. That is the advantage. This is a lot easier to have a good small community, right? Once you start getting over 200 people, then you start having difficulties with it. But I don't know if I want to go into that rant again. Actually, no. You know what? I do want to go into that rant, okay? Dunbar's number is that the human brain can basically only handle about 200 relationships. And after that, you kind of start to forget who's who and so forth. So once a community gets over 200 people, it doesn't scale the same way. You have to have different structures and so forth to be able to handle larger groups of people. And that's where you get things like cities and political parties and things like that. And the big thing that we've discovered in modern day is that the social media didn't scale very well. We had, like, when it was just internet forums and everything, that worked pretty well. Everybody was really liked internet forums, and so they said, let's make it bigger. And so then everybody tried to play on the world stage, like Twitter, where it's everybody trying to be the guy that everyone's following or whatever. And when we started going that direction, like, everything fell apart. And there's been a lot of stories about this recently. Have you guys seen this story? Like I think the one that was really catching everybody's eye, I read it yesterday. I don't know if that's when it came out, but I started seeing it yesterday. And I think it was a Medium article. Maybe I'm wrong. I forget who put it out, but it was it's okay, millennials, it's okay to mourn the death of social media. Something like that, right? I thought it was kind of interesting because they're like, yeah, social media died this year and it really sucks. And I'm sitting here like, nah, social media died like 4 to 8 years ago, guys. Like, you just didn't notice because you're in the media and you spend all of your time on Twitter, and you decided to quit Twitter because you couldn't handle that conservatives aren't suppressed on the platform anymore. So you tried going somewhere else and that didn't work. And so now you're bummed about it. You're not getting your Twitter high. But for the average person who only uses Facebook, social media has been dead for almost a decade now, right? As soon as they started shifting the feed and changing what you saw to suppress people promoting themselves, YouTube went down the tube. And that was the first death. And then there was the 2016 election where everything turned into politics and people turned off because of politics. And that was the second death of Facebook. Oh, I don't watch this live to trade, but to learn English? Oh, man. I want to help you, but I don't think I'm probably not a very good person to watch if you want to learn English, just because, well, for one, my speech can be a little disjointed, right? And for two, I like to use big words. Oh my gosh. So as a kid, when I was in high school, my friends loved to use, like big words and be really clever with the words that you're using and all of that sort of a thing, right? And then you grow up and you realize that, like, the most successful writing is at a 5th grade level. Like, that if you start speaking above a 5th grade level, that you narrow your audience and what you say won't be as popular. So I put all my effort into trying to increase my vocabulary and learn how to use big words and phrases and things like that. And then, the world wants the exact opposite. What are you going to do? And I never really feel like I adjusted. Hamas leaders tell the New York Times they don't care about Palestinians in Gaza. They just want to destroy Israel and replace it with an Islamist state. The stuff that I'm hearing about, like what Hamas is saying, like, really, like, how do you, okay, so you're the leaders of the West Bank, and you're basically telling the people that voted you in that you don't care. But I guess it was really like they only had like 30%. Really, I watch a guy live about the S&P 500 uses Portuguese and English at the same time while there are only 4 people. And that's on YouTube? Really? One of the things that we've always is it kind of seems to me like that if our stream is under a certain level, that it like pushes the stream more until it gets back up. There's like this equilibrium that it wants to keep the stream at for some reason. So I kind of thought that, if you have a reasonable amount of subscribers, like if you have more than 1,000 subscribers, that you'd almost always have at least a dozen viewers. But I guess that's not really actually true. Okay, well, we have had a little bit of a move up. I would say that it's on a little bit of sketchy volume still. Like, I haven't seen like a really meaningful, clear consistent flow long. It just kind of slipped up a few ticks. But that slip appears to be related to a shift in the dollar. The Japanese yen is kind of reverting back up here a little bit, and the dollar fell a good 7 cents. Oh, you're from Vietnam. That's cool. Oh, I guess that kind of makes the way that your name is spelt, That might help me. Well, that should help me know how to say your name, except for that I don't remember the rules for how to translate English letters into Vietnamese. I wish I knew more about Vietnam, though, because this whole thing that, there was a war in Vietnam that went on for a long time, by the way, okay? If you count when there was, the actual communist revolution in Vietnam, okay, to when the United States actually pulled out, that's several decades, okay? And as a kid, we was always treated it as like it was a lost cause. It was like, oh, we lost there, and now that place is lost to communism, and is, kind of like the way that North Korea is. But that's not how it happened. Eventually, they, like many communist countries, like China did, kind of realized that they needed to make some free market reforms and kind of open things up. And my understanding is that Vietnam is doing quite well right now. Well, I mean, let's not say quite well, but that they're growing and doing well compared to other, let's say, third and second world countries. There's a lot of growth in Vietnam, and a lot of the stuff that was going to China is now going to Vietnam. It's kind of cool. So it's kind of so it's nice that after that whole shit show with the Vietnam War, that Vietnam is eventually having its day and having some success. I thought when I learned that, I thought that was really cool. I watched that. Oh my gosh, the Ken Burns, the greatest documentary guy. His Vietnam documentary is so good, and I think about that all the time. Especially that part at the beginning where they're talking about going and killing the landowners and everything. That's disturbing to me. Ugh. 8.5. That's VWAP here, huh? Well, they went a little bit above it, and now they're kind of slipping back. So it kind of looks like there was an impulse long because of the dollar and everything, but they just kind of slumped back into the liquidity hole a little bit. Oh, now this is interesting. I'll read it according to Spanish pronunciation because Vietnamese was born from Spanish. Really? Oh, I didn't know that. Vietnam has a similar history, but due to geography, heritage preservation is not as good as in China, Korea, or Japan. Dude, I saw this, I think it was Zhaoling Summers. It's a comedian, female comedian from China. Her whole stick is that she's, Americans think that she's pretty good looking, but the Chinese people think that she's ugly. She doesn't match Chinese beauty standards, essentially. But she was saying, when people think about going to an Asian country, really what they're thinking about is Japan. And they'll come to China and thinking that it's like Japan, and it's not like Japan. Right? I think the thing that attracts Westerners, one of the things about Japanese culture that is attractive to Westerners is, going to a restaurant or a place and the people that are serving you taking great pride in the quality of their service and making you feel like you're royalty, like you're a king, And that's Japan, man. That's Japan. China's not like that. China is kind of more like the rednecks of Asian people is the way I think about it. China, but that's cool. That's cool too. But it's not. It's a different thing. It's not the formal. Oh my gosh! Like in the Japanese language, there is like a casual and a formal tone. Like in Spanish, there's kind of like there's you and there's you, and so there's like formal you and casual you. Okay, but in Japan, when you're using casual tone versus formal tone, apparently like the whole language changes when you're using formal tone. So you say Tokyo is the best? Sounds great. Ugh. It's the internet has been on this whole thing lately. I don't know why. Maybe it's just like I'm noticing it or something, but like there was this Reddit thread yesterday about oh my gosh, this is so I feel dumb talking about it, but whatever. It was an Ask Reddit thread that was basically like, people that have paid for sex, what was your experience, right? And there was this one comment in there that was like, here's my time is now, and basically he talks about, going to well, they're not brothels, but doing that in Japan, because apparently there's quite the culture of this in Japan, even though Japan has very, very strict rules. So, but the thing about the strict rules is that in Japan, prostitution is, if does YouTube care about what terms I use? Like they call it PIV. I'm sure you can figure out what PIV stands for, right? So in Japan, it's only prostitution if it's PIV, right? So you can go to all of these other places and get other kind of services. But then there's one kind of service that is basically like bathhouses. So like you go to a bathhouse and the girls bathe you. And that's the place where usually the most like illegal sex work happens. And so this guy wrote this huge long post about it. I'm like, what the heck? I don't get that about Japan. It's like, it's so incredibly conservative culture wise, and they even have pretty strict rules on things like sex work, but then there's this huge sex culture is kind of weird. It's like, I don't know, they make it illegal, but it's like they don't think of it as the same moral evil as like Christian countries view it. Repress is more accurate than conservative? Well, okay, no, I think conservative is the right word, because the reason why it is the way that it is because they put a great amount of respect for past traditions, and a great amount of respect for like other people, and like the people, the Japanese people as a whole, right? I mean, this is kind of a thing in Asian culture compared to Western culture anyways, is that Asian cultures are much more collectivist versus individualists in Western culture, right? It's a culture of shame and honor. Well, sure. But like in Japan, getting on the train and disturbing other people on the train is like a big deal, right? Because it's disruptive to other people. And the kind of like the social conventions and things, like they put a great amount of importance on it. In Japan, I mean, it's kind of changing, but if you're a foreigner and you move to Japan, they don't necessarily treat you very well. There are many places that you won't be allowed to go to as a foreigner, for instance. They say it's because, well, I don't speak your language or whatever, and I don't know how to serve you, and so I can't serve you very well. So their excuse, but like you just don't have very good rights as a foreigner. But that's because Japan is for the Japanese people, and they take that very seriously, even though they are starting to have to like relax some of that. It'll go to shit over time with the more immigrants, maybe. I mean, the whole thing is, you know, I'm generally supportive of immigration, but it depends on how you do it, right? And what I've seen in the West is we're just going to import the most people because the number of people is all that matters. And so, you know, when the whole war in Syria, was it, happened, and all of those refugees came over, and the Western countries were like, great, let's take in as many as we can. And the problem with that was that they were bringing in people that had absolutely no intention of assimilating, right? So, like, if I decided to become an immigrant to Japan, right, my intention would not be to change Japan. I would be going there and I would be saying, I really like what Japan is today, and I want Japan to continue to be like that. And a part of that is that it's not the culture that I grew up in, and so I'm not there to bring me into Japan and add to it per se. I'm there to enjoy what already exists, and I don't want it to change necessarily, right? But not everybody looks at it that way, right? You're in the United States. This is why Californians, I don't think I have any Californians on my stream. This is why people hate you, okay? It's because you think you're the greatest shit ever, and that wherever it is that you're moving to, you're going to bring California to them. And we don't want California. We like what we are. And we're totally great with having more people coming in as long as you're here to enjoy what we have. And if you don't like what we have here, you should go somewhere else where you enjoy what it is, right? Basically, it really sucks if you live in an area and you like the way that that area is, and then the demographics of that area is changed in a way that the laws change and the culture changes, and it's not the place that you liked anymore. We like Hawaii. Oh, there you go. Hawaii would be a great example. Hawaii is a very unique state, right? But what the West has been doing is they've been not just bringing people in that don't think that way, you know, that don't think about, oh, well, I really like what's there and I want to appreciate what's there and enjoy, you know, the West for what it is. No, it's actually a group of people that are straight up want to conquer the West, that want that, you know, for the last 1,000 years have basically been at war with the West and trying. You realize that, like, the Muslim world was trying to conquer the European continent, right? They conquered a good portion of Spain for a while there. And that was kind of where they were able to stop things, where the West was able to push back and stop it. Well, they would have taken over the whole European continent if they could have. And now it's with immigration, they don't want to assimilate. They want to make Europe Muslim. They are. And hey, listen, there's lots of different types of Muslims. There are some Muslims that I think can be compatible with Western cultures and values. A lot of the stuff that I see from people out of Saudi Arabia, for instance, is, you know, this seems like reasonable people. But a lot of the people that are moving out do not think that way. And yes, in the United States, we're openly bringing in people who hate us. Yes. The Saudi pilots love the USA especially. Okay. Yeah, reasonable people from reasonable Arab countries have no reason to leave. Yeah. Listen, I'm just repeating what an Arab said. Basically, he was saying, obviously, Muslim culture has its problems. Okay, they have their problems, but the Muslim world overall is doing pretty good, actually. And actually, especially when you're looking at like Saudi Arabia, it's actually, yes, they are growing and they can be prosperous, and they are overall doing good things. But he argues that the reason that they do that is because there are some bad elements, and they kick those bad elements to the curb. They basically say, we don't want this stuff, and they suppress it or get rid of it. And he straight up said, what you guys in the West are doing is you're taking those elements that we don't want, and you're actively importing them into your country, and then are surprised when it goes bad for you. Right? It's not that immigration is bad. It's it has to do with who you're bringing in. And I think the issue is that you don't really get a whole lot of control over who you bring in, but people that are, the people that you would want that are really educated and intelligent and law-abiding citizens are usually the type of people that don't have any reason to move from their country. Except for in the case of refugees, I suppose, but... It's a tough thing to talk about because obviously there's always like accusations of racism going around and things like that. Obviously, I don't think I've said anything racist, but like, you can go overboard. I think that those accusations are usually, people are too quick to go into things and accuse people of stuff that they didn't really actually say or intend, right? But there is a fine, it's very easy to start going down into that and make mistakes and say things that actually are outright racist, right? Okay, but the people making criticisms have valid points here too. Okay, it is very, very, very disturbing to me that we have mass numbers of people openly marching in support of Hamas. It's absolutely disgusting. It's absolutely disgusting. And they try and justify it and they say, well, Hamas is not the same thing as the Palestinian people. Well, okay, like, first of all, about a third of them did just outright openly support Hamas. And another good half of those people that are left are still, want to destroy Israel. They just didn't support Hamas in particular. Okay. The majority of, you can go and look at polling about what Palestinians in general believe in everything. It's abhorrent. It's just absolutely abhorrent. And the reality is that these people that are out like marching in favor of, what they say is marching for Palestinians are basically participating in anti-Semitism without realizing it. Listen, when it was the beginning of Donald Trump's term, and there was people out there that were like saying, well, okay, I'm out here marching because I believe that free speech is under attack. Because I believe that people are trying to erase the past, and they have good reasons for wanting to support certain things. But then there's also a group of neo-Nazis there. And people say, well, if you're marching next to neo-Nazis, doesn't that make you pause for a second and make you think maybe I don't need, I shouldn't be here? Okay. But now when it's the left doing it, they just look the other way. But here you're marching with straight up neo-Nazis, and not just like they're neo-Nazis. These are people that their primary goal in politics is to kill all the Jews. And you're marching next to them. Like, really, libs? What are you doing? Where did we go wrong? I'm telling you, to be seeing stuff like that happening in my country, we went wrong somewhere. We went wrong somewhere. You like Japan, you know about hentai. No, I don't really know anything about hentai. I know tentacle rape is a thing. That's about all I know. Going full right wing. I am full right wing, man. You hear what I'm saying? Like, well, when it comes to culture, it's conservative. I'm conservative. What am I saying? I'm saying that things that exist today, that there are many great things about the things that exist today, and that they should be preserved. Where things are good, they should be preserved, right? The leftist way of looking at things is, I don't care what's there. I think that I'm going to do better, and I'm completely willing to plow over everything so that I can build my new thing. That's the liberal perspective on things. And I'm saying, no, there are some things that are really great about the world. I really love the diversity. One of the things that bothers me the most, and I know this is like a first world problem sort of a thing, but since 9/11, you as an American can't really go into the Middle East and experience the Middle East. Before that, you could. My parents in like 1999 or 2000, I think it was, the company that my dad worked for, if you met your quota, they would take you on a big trip. And one year they went to Dubai. And he's got all of the pictures of everything that they did. And he brought back a bunch of like Arab, like knives and headdress and things like. I thought it was so cool. I think that Arab culture, like Saudi Arabia in particular, is super interesting. I think that culture is super interesting. I think that Japanese culture is I think that Chinese culture is very interesting. I find the difference between Chinese and Japanese and Korean cultures to be incredibly interesting, right? And I don't want any one of those countries to become something completely different. Obviously, where there are problems, we work on those things. And I think that it's best done incrementally, right? We identify what is like the biggest bottleneck, and we resolve that and kind of see where we are at and reassess, and then decide on what your next set of policies are going to do. But the left always wants to come in and just plow everything over and completely replace it. And not only that, but they have this idea that like, there should be this one best way. There should be this one global culture, and we should replace all of the cultures of the world with this one best culture that we have. I think that that's just absolutely abhorrent and ridiculous. And they're kind of trying to do that here in the United States, and I hate it. Yeah. Is it full right wing? It is full right wing. It's conservative. I like living in Utah. I like that you can't just go and get flat out pass out drunk in Utah, that the alcohol in the bars is kind of watered down, and there's a lot of rules that basically make it so that public drunkenness is not a thing in Utah. I like that about Utah. You probably should have the freedom to go and get drunk and whatnot. Go do it in a different state. I don't care. Lots of people complain about that because they want to go and get truly drunk or whatever the deal is. I don't care. I like that it's like this, and I don't want it to change. And it's okay to have places that have cultures and rules that appeal to one group of people and don't appeal to another group of people. And the people that doesn't appeal to, go to the place where they don't have those laws, right? I don't think that people have the right. I think it's very disrespectful to try and morph every place into what you think it should be instead of respecting what's already there, right? It is like stealing in Western culture is considered very, very, like stealing from a person is very, very morally reprehensible in Western culture. and in American culture in particular. And why is that? Well, because what you're really doing is you're stealing time, right? A person spent time working for that thing to purchase that thing, and that thing now represents all of the time that they spent on that to get that value, and then you just stole it from them. You're taking time away from them, right? Well, if I go in and I create something, a building, a piece of furniture, okay, like freaking making this desk right now. I've spent so much effing time on just a stupid desk, it's just a piece of wood, but my gosh, it's astounding to me the amount of work that you can put into just a piece of wood, right? And that represents a great deal of time and effort and camaraderie, because I really enjoyed making it together with my uncle and learning about woodworking from him and all this sort of stuff. And if somebody were to destroy that, I would be devastated. I would be absolutely devastated, right? Like people build things. That's all of their effort. We should be respectful of the things that people have built. And yes, cultures, that's part of what people have built. That's something that people over many, many generations have built. And I just think it's incredibly disrespectful to say, well, we don't care. We're going to just completely change it. Let's see, you're still quite poor despite being highly qualified. Most of us live on about $300 a month. That's why I need to trading. Well, I'd be very interested to know what kind of market trading opportunities are available to you in Vietnam, right? Because every country, it's a little bit different. But, there are places in Asia where, being in that country gives you access to other markets that might provide opportunities that are difficult to find in Western markets. So if you take the information that we have on this channel and you go and you apply it to a less mature market, you could do well, But I'm only here to see the jigsaw. Well, that's fair. I'll cancel speculators. Okay, that's fair enough. I get it. I mean, I think so going back to something we were discussing yesterday, one of the things is that, like, when we have discussions like this, I'm not necessarily, of course I indulge myself a little bit, but it's not just that I have like no self-control and I just talk about whatever right-wing crazy thing that I want to talk about. It's also because I think that there is value in it for people. So part of the value in it here is understanding what culture is and how it works, right? So what actually is culture? Here's what I say culture is. Culture is a model. Culture is a model that exists within your mind, and it is a shared model that we all have together as a people that we use as the basis for interactions with each other, okay? So the way that the frontal cortex of your mind works is very similar to a machine learning algorithm, which is to say that you've got all of these little neurons that are connected together, and then the data is pushed through those neurons, and then they analyze that data and kind of arrange themselves in a way so that in the future, when you get the data in, they can just really quickly interpret what's going on. Okay. Now, the reason that we have evolved this is because humans are so incredibly close social tribal people. Okay. And so when you're having social interactions with people, you're like in a group and you're all talking, you need to be able to catch all of these subtleties in people's body language and in their voice and in what they're saying to interpret, because what people say isn't exactly what they mean, right? But there's all of this nuance involved in it, and you are able to soak all of that in and immediately understand what's going on. And why is this? Is because of those executive functioning in your frontal cortex, right? You don't even think about it. You don't go and say, okay, well, this person, he kind of had a smile on his face when he said it, and he really exaggerated the tone of his voice when he said it, so that must mean that he was sarcastic. That's not what you do. You have these mirror neurons in your brain that are mirroring what that person is saying, and then they immediately go, and the output is, oh, that's sarcasm, right? That's how your brain actually works, right? And so in order to do that, because if everybody's behavior was different, then that wouldn't work, right? So what we have is we have culture. We have this shared model in our mind that is kind of like the basis. Like you don't, well, you start with a blank slate to some extent, right? But we immediately put this model of the culture on it from as you grow up, and then that is kind of the basis for your interactions. This is why autistic people really struggle a lot, because autistic people are not able to build that network as well as other people. They essentially have to build that network completely with logic, because they don't have these kind of they don't build these frontal cortex networks as effectively as other people do, that just output the answer instantly, right? And so then the question becomes, okay, what should our culture, what would be like effective culture, essentially, right? Because here you have a family, or we have a community here with our trading community. What are the things that we can do that would make our culture more effective, essentially, right? And so that's what I'm always thinking about. That's why I spend the time that I do railing against technical analysis and talking about empirical data, because I want the culture to be immediately, we should be skeptical about what people are saying, and we need to try and prove things out scientifically. But I also want people to be willing to take risks, right? So there's this balance, right? We want society and culture to be able to continue to progress and to deal with the societal issues that we have, but we don't want to completely throw away the good things that we already have. So there needs to be a reverence for the past, but an attempt, move towards progress as well. That's what I believe, and that's the culture that I'm kind of trying to create, and that's why I have to talk about it. Because if you're the kind of person that is like, I'm just going to bulldoze over everything, I don't want you, right? Because I don't want that to infect the culture, That's why I talk about it. I think that sometimes there are things that you should do simply because that is the thing that's presented to you. That's the thing that's close and that's available. Okay? Like if your father was a woodworker, I think that you should learn woodworking from them, because that's an opportunity to learn about something that most people don't get. It's there and it's available. And you see, the approach that most people have is, well, that doesn't really interest me. Dad, I don't, I hate that you want to push me towards this one particular, because that just doesn't interest me. I want to become this. And that is a very, very strong, there's, how many movies are there out there like that? Like Kung Fu Panda, that's a good example of a movie like that, right? Dad wants you to become a noodle shop owner, and he wants to learn Kung Fu, right? But I say that you should still be making the best noodles, because it was something to learn that not everybody will be able to learn, and it's there and it's available to you. Doesn't mean that you can't go and make your own path at some point, but you should take advantage of what's close to you. And I say, like, in your area, what's the thing in your area or what's the thing in your family that your family, because I think it's very, very sad that you'll have people that come from a place or from a family that did a certain thing, and then they grow up and they don't know anything about that thing because they weren't interested in it. That's sad to me, because that was an opportunity for you to absorb some culture that would enhance your life, you know, and would be an asset in addition to the things that you're actually interested in, right? And we should do that with trading too. Like, go and read about the, you know, especially these hedge fund guys and like how they did it and stuff. What were the things that were important to them? Are you able to use the Jigsaw on so they do not have a mobile application right now. The best mobile application that I've seen was Iron Beam. So Iron Beam has a web apps, the desktop app and the phone app are pretty much the same thing. And yeah, you get a DOM on your phone. It works. It's actually quite amazing to see. To hold the DOM in your hand is actually really, really cool. But not with Jigsaw. And I mean, the thing is the way that you're going to want to trade with Jigsaw, you know, I don't think really makes sense without a full computer and a mouse. So. Oh, I missed Thuy saying everything can be. Is that, am I saying Thuy? Can I say it that way? I don't know. Everything can be traded because Cambodia is right next door. Oh, okay. Because the whole thing is, if I come in here into the treasury, so teaching you a little bit about treasuries, something that happens that you don't hear people talk about, and I don't know why. Maybe I should make a video about this. Okay, but if I worked for like a big bank, one of the things that they have is auto pull. So basically, what it will do is it will say, I want to be able to potentially take on 500 contracts at any one given price, potentially. That doesn't mean that I want to have 500 contracts long right now. It's just I want to have the ability to be able to take on 500 contracts long at any one particular time, right? So what I could do is I could put 500 contracts at every price. So if we tick up, I could immediately add 500 contracts, and now I'm in the queue. And I can add them before everybody else so that I'm like at the front of the queue. But I don't necessarily want to get those 500 contracts filled yet. I want to have the option of doing it at some point in the future, possibly, right? So if I stack those 500 contracts on there and then price comes back down, then I'm going to immediately pull them. So that they don't get executed. Okay. This is a thing that happens. So basically, anytime that you see price tick up or down here in the treasuries, you're probably going to see 1,000 contracts cancel. Like if we ticked up 0.4 half and put a reasonable bid at 0.4 half, and I think it need to be more like 500 contracts. See, they didn't do it that time, but you know, or maybe if we ticked it down at 0.4. They look like they're kind of stuck in a range here at 0.4 half 0.4, but you know, if they put a decent bid at 0.4 half, you'll probably see at least 700 of that 2,700 that's on there right now pull, right? So people will see that and they'll be like, oh, well, that's the stacking and pulling that people are talking about. But all that is the queue saving applications canceling their order, but they're there so that they can save a spot. Right? You want to be at that's the front of the line. And why do you want to be at the front of the line? Well, look at what it's doing right now. It's going back and forth across 0.4 half over and over and over again. So if you had an order, if you're 2,000 in line at 0.5, you're not getting filled right now, right? Because there's only like a few dozen contracts. But if you were at the front of the line, you already got filled, right? If you were at the front of the line, you could have bought at 0.4 half and you know, you're at the front of the line, so you're exiting at 0.5. And that's what we call an alligator. Because your order is sitting there waiting underneath. Right? or a crocodile. Maybe we should call it a crocodile because there's this other technical strategy that they call an alligator. Jaws. Anyways. Okay. So like being at the front of the line really, really matters. And there's all of these algorithms out there that are competing to be at the front of the line. So in the 2000s, there wasn't a lot of people that had access to the electronic markets to do this. And so there was people that, you know, every time that it ticked up strongly, they were putting a bid there. And their DOM would look like this. They would have orders at every price, you know, sitting there waiting in line. And then they would cancel the orders manually so that when they didn't want to be executed. And then when they saw a spot where it was like things had kind of come out of whack with their correlations or whatever the deal was, then they would say, oh, okay, I'll sell this one. And then they'll sell and, you know, somebody else will sell into my order. And then I take a tick. Right. So if you're here in the West or you're trading on the CME, those kinds of strategies don't work very well because you just can't get to the front of the queue. There's just the robots are too fast. Like you can try it, right? Try and get yourself a spot that's less than 500 in the queue. Like after it's ticked in an area, like if it ticks up, we're in a trend and you start putting bids and like be left with like 500, it's super hard. But if you live in an emerging market, like maybe Vietnam, there might be some markets available to you that aren't as mature where you might be able to get at the front of the queue. Like this guy was his name, Paul Rotter, that he was kind of doing all this crazy stuff with like he'd have big stacks and then he'd pull them and it'd go the other way and everybody get confused and he'd make money off of that. Basically, he couldn't make money in Western markets anymore, and now he lives in Singapore because he can make more from Singapore. Joan Van Beek. Beek? Good morning. Oh, my Discord crashed again. Let's bring that back. What's with that? I tell you what, I came in here thinking, well, it's an auction and everything. We might get some opportunities today. Not too impressed with the action so far. It's just gone across this narrow range and now it's found a really strong, well, okay, now that's a little bit different. Somebody is stacking here now. That is kind of activity that I would normally start to think of as a trend and want to jump on board. But the action immediately preceding it makes me very suspicious of that move. Like I'm very suspicious that all of a sudden it's just turning on now at 747. That's a little weird. And I'm not seeing any of the other markets moving with it either. So I'm going to pass on that one, even though that looks like a really great trend. Let's see how this. So the thing that should be paying attention to here in this situation is how solid is this new liquidity that because basically we moved up 3 or 4 ticks and there was relatively strong bids with it, and the market is, you can see there's a lot more level 2 changes. Like the market is turned on almost as though there was some news. I don't think I'm here missing. Well, no, I haven't heard anything from my news squawk. The last thing that I see on Twitter is USD BRL real to stand its ground if the real economy turns out to be robust. This is I'm not getting anything. So it kind of seems like it's turning on because of news, but I don't actually see any news. And it's doing so from such a quiet market that I'm extremely suspicious about this move. Like, if this had happened in the first hour, I would maybe think a little bit differently. But why would you start something like that at, 15 minutes after the S&P 500 opened? And it's not like the S&P 500 is doing anything. Okay, so they took it offer at 07. Like, I want to see, can they trade down 06 half? Right, because if they trade down 06 half and there's like hardly any contracts there, right, then that would really strongly suggest to me that it is kind of a little bit of a shenanigans. Okay, so there's a little bit of iceberging at 06 half. I tried to take it as she goes, but they didn't clear it. So I got trapped there. Okay, so you see that they ticked down at 06 and almost all of that liquidity disappeared, and now they're trying to hit back into it at 06 half and they're iceberging on there. This is getting interesting. Okay, ticks back up. It takes 3,500 to do it. Okay. Okay, that time it ticked down, not a very strong offer. Nobody's hitting into the bid yet. Kind of looks like that. Oh, maybe I'm wrong. I was like, I don't think that 06 is just going to go, but it did. It went with only 581. So this is what I was hoping to see actually when I got into that. So we'll see. This was about as pure of an order flow read of a trade as you can get from me. But there was still some context involved in it, which was me going like, that move doesn't really make much sense. And we'll kind of see how it goes because I'm not making too much from it yet. Their 04.5 was kind of like the center area, right? So if they bust through 04.5, then that would be really interesting as well. Would you mind explaining the basic use? So what do you mean by that? Basic use. Oh, okay, I getcha. Okay. Hold on a second. So not really liking that. I'm gonna bail. Okay. Jeez. Kind of interesting flow. It may as of yet go my way, but there was enough pushback against that I don't think I'm gonna get quite what I wanted. So I decided to bail on it. Okay. this blue column right here that I'm highlighting in yellow are bids. Those are people with limit buy orders at that specific price waiting in the queue to get filled. Orange red column are sells. Okay, people waiting on the offer to get filled. Okay, so if you market buy, then what will happen is you will get matched up against the best offer. Okay, that's this column right here, right? You see how 84 have hit into that best offer. Okay, and same over here. These are the sells. 65 have hit into the best bid. Okay, so what I'm watching is when it ticks up, what was offered. Right now there's 934, right? So there's 934 on offer. But when it ticks up, how many contracts did it actually take to clear that price and make it tick up, right? Is it going to be more or less than 900, right? So if it's more, there's an iceberg there that basically suggests that there's some latent liquidity there. Okay, so it is. It's 1,200. It's 1,200 so far. Oh, actually, sorry. It was 676. Okay. The offer moved up to 1,200. Okay, now there's 1087. Okay, so there's actually more liquidity there than they're showing on the bid. So that means to me that there is somebody being sneaky about selling it right here. Right? Now, but I also want to see what's on the other side. But that's basically, it's saying that liquidity right here is pretty good. Liquidity here is pretty good. You're going to need a lot of market orders to get through that. Right? Same right here. It's probably like this. Because they didn't hit into the 05. Right? So now we've got this place where they might get stuck and go back and forth right here. Has the makings of a liquidity hole in it. Okay, but that's kind of what I'm looking for. Now, on the other hand, what if it had been less than 900, right? It hits into it and it was only 400 contracts. It ticks up, right? And then I immediately start seeing people buy into 06 half as well. Okay, well, that means that these orders right here, they're canceling. Like, especially if it's like only 400 contracts. Because again, if I tick up, you're going to see some of those guys at 06 half cancel because those were just saving a spot in the queue, right? But if like in the end, all of them cancel except for like a few hundred, then that basically means that the market makers are all getting out of the way, right? And these buyers are buying very aggressively, and that's where you can get some trends. That's where you can get like something's going on and they're buying it for some reason, right? Now, what we're getting right now is we had one of those, and I'm very suspicious about it because there's no news. It happened at an odd time. That doesn't seem like that there would be a large meta order in this situation buying like that. That this is probably something more that a market maker would kind of pull their offers and kind of coax it up in the hopes that they can get a lot of activity in here for them to do something, right? Like maybe there was somebody that was long from down in here and they want out, and so this activity will give them more liquidity to execute against, right? Like we've seen 2637 traded there, right? So there's more liquidity available now because of what happened. So you can take advantage of it using it to see what trend direction to take. Okay, yeah. So now that you understand what you're looking at, now we have to talk about the stylized behaviors of order flow. Okay, so I just mentioned one of them to you, kind of, which is that there's always a certain amount that cancel anyways because they're just saving their spot in line. So just keep in mind, like you see 3,000 there right now at 07, expect it to come back down to 2,000 if that price goes to the best offer. Okay, that's the first one. Second one is that there, there's always going to be people putting new offers in and canceling new offers. Okay, this is one I haven't talked about in my videos, but it's I want to talk about it right now just because. Okay, so let's say there's a certain amount adding and there's a certain amount canceling. But here's the interesting thing. Okay, the more orders there are to cancel, right? So basically you kind of get this equilibrium spots where it's like, because of the amount of canceling that you're getting, the larger this offer gets, the more actually take off. And so there are certain numbers that they're likely to sit at. So you'll see that they'll probably hang around 900 and 1200 and 1500 and 2000 a lot. Okay, and that's because of that sort of stuff. So you can also use that to your advantage to kind of read what the bid and offer is doing. Okay. The next thing is the square root law, which is if you're getting a trend, its impact is kind of like this. So there's kind of like an upper bound to how much impact that can have. And then when that meta order stops, you kind of slump back into this hole. You get this area where the market makers don't want to put up a lot of liquidity, and we go back and forth, right? So what I'm looking for after a big move up is a liquidity hole where things end up balancing back out. So we got a little bit of evidence that it's happening at 06 half and 06, but I think that it's probably a little bit too early for that sort of thing to be happening, and I actually suspect that they might move up to a new high, to be honest with you. Okay. So you're going to see those holes. So what we're going to do is we're going to look for some big executions, and then, one price where whether it goes bid or offer many, many times, there's hardly any liquidity placed at it. Right? Okay. Then the next one is autocorrelation. So people think that like the reason we have trends is I see that it's going up, so I buy, and we all do the same thing, right? But when they tried to use models like the same kind of models that you'd use for like nuclear fission, they found that that didn't explain what the market was doing, that wasn't a very good model. So they came up with a different model, which was there's somebody really big out there buying, and they just need to buy for a really long time. And when they used that model, then they were able to explain all of the stylized behaviors of markets. So we need to look at this as there is really big players out there buying. Sometimes you've got somebody really big buying and somebody really big selling, and they're kind of haggling and it's going back and forth, right? But sometimes the combination of all of the people buying and selling is that there's just more that need to buy than there is that needs to sell. And so the market orders, there's going to be an imbalance between them, essentially. Okay. And the way that that will look is if I come back and I look at this chart, for instance, at cumulative delta, is I want to see cumulative delta continually moving up very consistently over time. Okay. This is a meta order, essentially. It's a large order that can't be executed all at once, and it has to be split up. Okay. Or some people will call them like drip orders or things like that. Basically, there's this algorithm that's putting a certain amount of buying or selling into the market over time, causes it to push up, right? And that will follow the square root law. That meta order will follow square root law. So you'll see stuff like this where, okay, here's the curve, right? Probably this is when that meta order stopped. Okay. And you can see all through here, he's still buying, but it's not really moving things, right? Because it's in the liquidity hole, and he's buying is just not as aggressively, right? So that's how they execute. But what I can look at is that I can say, yeah, if we're, when I start to see this, I want to go long, essentially, in anticipation that there's more of that order out there. Now you can kind of quantify it. You can come in and I'd say 10,000 is about an average move, right? You can quantify it. Geez. So now I need to kind of come back here and reanalyze now that the cumulative delta has reached new lows. They did slip back through. So, I think I'm okay with getting out when I did and everything. I would be up 5 ticks now when I got out at +3, I think. So, but now I'm kind of looking at they might slip through into the other side of the range. Right, like we've got a really strong meta order selling from that. S&P 500 is falling. Japanese yen is kind of starting to follow the treasuries down. Gold is really getting hammered here again. Oil is down pretty big today. Chewy, you've been in the hospital. I'm sorry. Octavia says super narrow initial balance break should be good. I mean, it looks like a break and reversal, right? Now the question is, will they turn and push down to the other side? Or will they just rebalance out and do shenanigans again? Well, I feel that the amount of selling that we've seen from 06 half to 04 half is a little bit stronger than just there's going to be market maker shenanigans here. So I think that there actually is a good chance that we slip back through a little bit further. They might have a hard time of it and might be really slow, but well, and there is an iceberg there at 04 half, so this what we're seeing right now, icebergs. This is one of my least favorite types of markets, is iceberg city. That can make it incredibly difficult to read what's going on, because basically you've got big guys on both sides putting icebergs out everywhere. All the pulling and stacking on the DOM isn't considered spoofing in bond markets. Well, okay, so if I have an order out there and I'm saving a spot in line, and then when there's a chance of it getting executed, I cancel it so that, because I didn't actually want to buy, I just wanted to save the spot in case I did want to buy at some point. They don't consider that spoofing. Okay, and so the algorithm's doing that all the time is, no problem. I think that with the way that the law is constructed and everything, spoofing, there needs to be a certain amount of intention behind it, right? Those guys that got prosecuted for it, the reason that they were successfully prosecuted was because they had Slack messages, essentially. Well, it was other internal tools that they had, but they were talking with each other and being like, dude, I really want to go to lunch. I really need to get this order filled. Okay, I'm just going to spoof it so that people buy. And then he goes and he spoofs this big buy order in here, and everybody sells, buys into him, and then he's out of the market and he can go to lunch. And that's how they prosecuted it, as spoofing, right? So, I wouldn't consider like the 500 to 1,000 that always cancels on a tick up or tick down like spoofing. But what would be spoofing is like, well, we don't have a good example anymore, but for a while there was 4,000 contracts at 06, right? Let's say that there was 5,000 contracts at 06, and then we ticked up, and then all of a sudden there's 1,000 at 06, and it ticks up, and only 500 have to trade to clear that price. That I would say is probably a spoof. That was probably somebody trying to manipulate the market, and then when they came in to buy it, the liquidity wasn't there. Okay. Another thing that you might see that's kind of related to spoofing that I think kind of trips people up, that I would note, is the way that you will create an iceberg sometimes, what you can do is you can say, okay, I want to buy 10,000 contracts or something like that. So you come in and you put an order that says buy 10,000 contracts, okay? And then it doesn't get filled. It scares the market or something like that. So what do? You right click on the order and there's a little checkbox that says make iceberg. And then when you click iceberg, then there's the other fields that show up, which is like maximum amount to show or something like that, right? Which is how much of the iceberg do you actually want to show at any one time, right? I only want to show at max 300 at a time. And then if those, as those 300 get filled, I just stack back on again, right? And then that's an iceberg, okay? So that's another thing that you might see is you might see a really big order get placed and then disappear, reduced, but it's still there. It's just they converted it to an iceberg. And so then when you see it trade up, you see that there is iceberging and it still takes 6,000 contracts to trade through it. That's another thing that you'll see happen a lot. Kind of interesting, right? I guess maybe to a normal person it wouldn't be, but I find that sort of stuff really interesting. That's what really gets me going. Icebergs all, when we came up and then there was icebergs on both sides, we came back down here and I see icebergs on both sides again. This isn't Seth's market, right? I think I took a reversal trade there and didn't really get paid for it. And I think looks like that's about the best I'm going to get here today, man, because it's already almost 8:10. I mean, we got 50 minutes left. I could take another scalp, but with the way that this market is behaving, that there was a breakout, the breakout failed, we've come back into the range, and now it's starting to do all of this icebergy stuff within the range, that suggests to me that this is not the kind of market where there's a really strong, clear meta order going one direction that we can just ride the whole session, which is what I really want, right? Is there any program that can track icebergs? Well, so in Jigsaw, there are some settings where you can come in and you can tell it to set alerts on whether or not something was an iceberg, okay? If you come over here, I think it's... where do I get it from? Maybe they just don't have it in this one. In the auction vista, though, it will... Trying to hold on. I don't know. Okay. But if you're just looking at it, so let me explain the iceberg thing a little bit before I forget where it is in Jigsaw. I think that there's an iceberg alert somewhere, but I can't recall where it is. Okay, maybe it's in the reconstructed tape. Okay, but the way that an iceberg works is I have 5,000 contracts to buy, to let's say sell. I have 5,000 contracts to sell, but I tell it to only show 100 at a time. So I'll put 100 out, and then if people hit into me and they buy, they buy 100 contracts, then it will offer 100 contracts more. Now, if you're using, and you can do it synthetically, you could say, every time that orders get filled, just stack more on top of it and do it. But you can also do it on the exchange. When you do it on the exchange, what you'll see is like, okay, there's 627 on offer, right? And then I see 200 contracts trade into it, and I don't see the offer change at all. Don't see the offer change at all. That's exchange side iceberg, because the exchange basically refreshes it before we even see anything. It automatically refreshes it immediately. Okay, so but the way that we see it is kind of like, there was 2,000 contracts on offer, but then it took 10,000 contracts to push through it. Then I say that's an iceberg. Okay, So there's kind of basically what I'm saying is that there's kind of different levels of an iceberg, right? There's an exchange side iceberg, there's a synthetic iceberg, and then there's kind of more of like a soft iceberg, which is you'll see the bid, the offer change quite a bit through it all, but in the end, you know, it takes more than 3,000 contracts to clear a price. There was an iceberg there, essentially, right? So to me, the just as you can see here on the DOM, 51.24 up at 06.5, right? That was an iceberg. We're putting 3,000 contracts per price in liquidity, but they traded a lot more than that. So there had to have been an iceberg there, and that's how you look at it. So in Jigsaw on the Vista chart, they will draw little bubbles for where it sees icebergs, and you can kind of adjust how sensitive it is. You know, how big of an iceberg it has to be for it to show up on the chart. But generally speaking, I don't find the icebergs. Yeah, well, Octavia says charting the icebergs is not helpful. Let me put it this way instead. A lot of people will say, when you see an iceberg, you want to trade with the iceberg. There's 5,000 contracts on bid that somebody that really wants to buy, they're likely to push higher. That's not what happened, was it? There was the iceberg there. Once they got through the iceberg, the buyers were exhausted and they sliced down here pretty quickly. Right? Oh, yeah, I like using an iceberg as an exit too. Definitely. Okay. So icebergs on their own are not incredibly predictive about what's going to happen, but they still tell you things. And there can be some situations where seeing an iceberg all of a sudden is useful, right? Like if we, for no apparent reason, just immediately ticked up 6 ticks, and then I started to see selling, and there's iceberging right there on the selling, I'm gonna buy it, right? That's like something happened, and this guy, he's moved his iceberg up there, and he's gonna buy any contracts that come in. Like something's happening, right? There's maybe a context where maybe I could use the iceberg, but I kind of look at the iceberg as kind of more of like a, you know, there's a place where you can kind of get executed, right? If you want to sell, there's going to be contracts for you to market sell into, and if you want to buy, you know, you'll usually get a good spot in the stack, because usually when an iceberg is happening, the bid or offer that's iceberging is pretty low, right? It's going to be like there's 500 contracts on bid, but then it just trades and trades and trades, and it ends up being, you know, a 10,000K iceberg. If you put an order in there, you're going to get filled, right? So now there's an easy way to get filled on the bid or offer. So if I want to buy it, or like as they were saying, I have an exit, that gives you a really good place for you to get an exit, really easy place to get an easy fill. So that's one of the main things that I look at for it. And if it's the opposite, if I see an iceberg like that, like for instance, we come down pretty aggressively, I think we're going to continue to sell, which frankly at this point I think we probably could. I think that it was okay for me to have given up on that trade, but like, look, it's working out. We're coming to the other side of the range. You know, if we came down here aggressively enough and I'm seeing iceberging at 0.2 I'm just going to look at that as, yeah, those are people exiting at the bottom of the range. But if I think that this meta order is much larger than that, they're just going to pound through it. And so that becomes a good place to try the as she goes level break sort of a thing, trying to hit into it just as it clears. And then what happens is, you know, there's all of these market makers that are coming in doing stuff based off of what the iceberg is. And so if they push through the iceberg, usually they go a few ticks further, as all of the market makers have to bail on their positions and re-equalize. Evens are a good target for an initial balance break. Yeah, I totally see that. Yeah. There's another stylized behavior of markets, right? And this one is psychological. Markets love even numbers. In the treasuries, it's even stronger because that's where the options are at, right? The options are every quarter of a handle. So 08, 04, or sorry, not evens, 08, 16, 24. So yes, he's right. If we are to make a break, then I would expect there to be liquidity at 108 evens, and for them to eventually trade that price. I would say though, this is a pretty liquid market right now. The amount that's like being shown on the DOM, I'd say is average. It's better than it's been recently, right? There's 3,000. There's one price there at 05 is showing 4,000 contracts, right? Okay. But there's lots of iceberging in here as well. So the latent liquidity is actually much higher than what you're seeing on the resting liquidity. We have sold a net since I first initially said this might reverse, because I'm seeing the pushback, this might reverse. We've sold 20,000 contracts. Okay, I was in at 04 half, so it looks like I could have made 15 ticks on it. Okay, but that's actually like a really small range for 20,000 contracts. Okay, like normally, if this was 2 weeks ago, putting 20,000 contracts into the market would have moved us way more than that, right? So this is a fairly liquid market, and that makes it very difficult for me to really ascertain if this is going to continue selling or not. 20,000 contracts is a lot. So I don't know if that selling order is going to continue. Basically, what I'm saying is that my original trade was great, but trying to jump on it now at this point doesn't make a whole lot of sense. Maybe if I thought I could get a level break trade, then I might get in. A little concerned that they won't do something like that until I'm done trading, though. So I think in this instance, I did a good job, but this move just didn't quite play out the way that I needed it to in order to really get a winner here. Okay, so I'm going back here. Was Crypto Tick Trader asked, what is the relation to supply and demand and square root law in respect to world assets such as oil? Okay, so this is where we talk about inelastic markets. So first of all, note, supply and demand is very different from support and resistance. Traders confuse these concepts. And basically what happens is they say, well, supply and demand is a thing, so that must mean support and resistance is a thing, right? They say supply is support. Or is it supply is resistance? I don't know. That's when you have to realize that a market in the DOM is actually 6 forces. You can see 4 of them in here because there's a column for every one of them, right? The 5th and 6th forces are the limit orders canceling. Okay, so market orders, buy and sell, limit orders, buy and sell, and limit orders canceling, buy and sell. And those are the 6 forces, right? So you can't really think of it as supply and demand, but you could think of it as like, this is sell supply. The limit orders are sell supply, and the buy orders are buy supply, and then the market orders are buy and sell demand. You could maybe think of it like that. Okay. But there is the economic concept of supply and demand, which is people that need to buy the commodity and people that are producing the commodity and providing it to the market, okay? And one of the key things that they're looking at in regards to supply and demand is what they call elasticity. So if a lot of people are buying the commodity, then that provides an incentive for the producers of that commodity to make more of it and to increase the supply. And so the supply is essentially becomes elastic, is what they say. It's like a rubber band. It's like, an increase in demand will create more supply and bring price back down. That's elastic. Okay. Like you have a rubber band between your two fingers, and if you move it up, then the rubber band is going to want to bring the fingers back together. So price will come up, it'll come back down, right? Now, the key thing I'm going to teach you, and this is probably, this is like the wildest thing I can teach you about markets. And I've got, every little piece of information I've been giving you about the stylized behavior of markets kind of are all hinting at this, but this is like the highest level way of explaining what this is, and really it explains why this stuff is so important. Okay. What would be the market is inelastic. Okay. The market is inelastic, or at least the research that we have strongly suggests that financial markets are inelastic. Okay, so what does that mean? So I said elastic is, it moves up, it's going to get pulled back down. That there's like this mean reversion behavior, right? So inelastic would be like the exact opposite, right? If it moves up, it would be like a rubber band that like pushes you further apart even more, right? Or it's like, you move up, the rubber band just completely stretches, right? And it takes a little bit of time for the rubber band to contract back down, essentially. Okay, that's the way that you'd think of it. So what happens is the orders that these guys need to go and execute are so big relative to the liquidity that is out there that it just puts a huge strain on the liquidity. So if you move up, all of the liquidity providers just kind of go like, whoa, hold up. No, I don't want to trade against that. They disappear. And so a move basically makes it easier to move in that area where all of the liquidity disappeared from or had just been traded through. Just like you get this, we had this big move up, we had this big move down, and like, look at how freely they are moving now within this range, right? They've already come back like 2 times. Right? Basically because like the liquidity has disappeared. Right? So what this means, though, is that the market's response to those new orders is actually way, way higher than we all think. Okay. So you think, I go and I buy a stock. I put $1 into the stock market. How would that change the market cap of the stock market? Intuitively, I think you would say, well, the market cap is supposed to be a representative of how much money is in the market. So if I put $1 in, it should increase the market cap by $1, right? But what they have found both theoretically and empirically, basically they've done some modeling and then they looked at that in the market, and they found that actually, if you put $1 into the stock market, it increases the market cap of the stock market by $3 to $8. So let's call it 5. Okay. So basically, your $1 has 5 times the impact that you would intuitively expect. Okay. And add on top of that this square root law. Again, which basically means, okay, the square root of 0.01 is 0.1, but the square root of 0.02 is 0.2. Wrong. It's 0.141 blah 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 blah. Right. So it's not even 1.5. You doubled the volume, but it's not even 1.5. Okay, so what that means is that larger orders, the impact per contract basically decreases. So these big orders don't have as much of an impact relative to you as you might think. They are bigger than you because they're like way, you're like one contract and they're like 100,000 contracts. Okay. But, the difference between 50,000 contracts and 100,000 contracts is not as big as you think. You'd think it would be 2 times, and it's not. It's 1.14, whatever, right? So all of these orders out there are having effects on the market, and because the market is inelastic, they have very strong effects on the market. Okay, now you can see why is trading so hard. It's because everything that everybody is doing has an effect on it. And so you're trying to look for like some pattern, right? The market tends to do this. Well, you trading on the pattern affects what the market does. And so if we all want to do something like buy it when it crosses a moving average, right? Well, it's going to move before that happens because the orders just have a really strong impact on it, right? Everybody that's trading that particular strategy, they're going to move it. So then in order for you to make money, you have to buy it before all the other people that are looking at that signal buy it. So now you say, I'm not going to buy it when it crosses it. I'm going to buy it like when it seems like it's going to cross it, and it's, like it has, it's headed in that direction and it's not quite there, right? And then other people start to do that. And then it just goes further and further back until basically like the signal never happens then, because you've washed it out because you're trading it so early that there's like no signal left anymore. And then the trade just becomes random, right? So you get a market that is extremely statistically efficient. You analyze price and you look for any kind of movement or pattern. Like everybody else is looking for that, it disappears. But then at the same time, you come in and you say, okay, so that means markets are efficient. Well, but there's different types of efficiency, right? Because we're saying it's statistically efficient. But when like economists are talking about efficient, what they really mean is that like the current price is reflective of all available information, right? They're saying this, there's an auction today, but then there's also a lot of treasury issuance, and then there's stuff going on with the Bank of Japan and yada, yada, yada. And they say all of this information is factored in. Well, basically, investors look at all of this information and decide what would be a correct price based off of that information. And then the wisdom of crowds all combines together to create a price that is perfectly reflective of all available information, right? And that would be like an efficient market, okay? But that's not actually what happens. What actually happens is people buy and people sell, and when they buy or they sell, it moves the market. And it doesn't matter if they're buying or selling because of something that the Bank of Japan is doing or because they were just bored, it moves it. And so the reality is that the price is actually never equal to what would be like that fundamental value, that perfectly efficient price. So you have a market that is very statistically efficient, but very informationally, fundamentally inefficient. And that is to our advantage, right? Because if the market is not informationally efficient, then that means that there can be things that we know about the market that is even public information that isn't factored into the price. And we might be able to identify situations where it starts to become factored into the price and we make money. And that's why I tell you, focus on informational inefficiencies. All these other things like the square root law and all that, that's very important stuff to understand, because it helps you understand like the very nature of the market, and it kind of puts you on par. But to really make money, to really have an edge, I say that it's the informational inefficiencies that are really going to give you the edge, or they're most likely to give you the edge. Of course, you could find a technical inefficiency, right? It's just the market is very technically efficient, so they're hard to find if any of them exist anymore, okay? Because there's robots out there looking for them and crap, right? So you stand a better chance of finding an edge from the informational inefficiency. See why it matters now? Well, so Okay, so now that we understand all of that, let's create a model that we can kind of use to structure our trades. Okay. So that's why I say there's like 5 things that you want to have involved in your strategy, things that we know, are involved in the market. Okay. One is going to be like your standard risk management, of course, right? Okay. One will be correlated assets, things that are correlated. One would be volatility. Okay. There are stylized behaviors like volatility clusters, et cetera, et cetera. One would be order flow, which is all of the things that I just told you about. Right. And then one would be predictors of order flow, which is basically the informational inefficiency part. Okay. And that's the most important one. That's the crowning jewel. That's the one where, at least with the way that I trade, that your primary edge arises from. And everything else is kind of just giving you the best chance for those trades to be able to work out. But where the edge is coming from, informational inefficiency. And it's not the news, it's predictors of order flow. So changes in expectations about future order flow or about future fundamentals can predict orders. If Chairman Powell comes out and says, I think that we're going out into a recession, that's going to change people's perspective about what the future fundamentals are going to be. And then they're going to go and they're going to submit orders based on those changes. Okay, so Chairman Powell saying something could predict the orders. Okay, so that is news. News can predict orders, but it's not like the news. It's not like the news magically moves the price or something. Because again, people think that it's like, oh, there's the news that changes the fundamentals, and so then the price will move to where the new fundamentals are. But then they watch the news and they say, well, that piece of news was really important and they hardly moved at all, or like they moved way too far or whatever it is, all right? And so then they say, well, the news must not matter, right? But that's because they're trying to think of it from a fundamental perspective instead of from an order flow based perspective. The order flow based perspective is that the news will generate a certain number of orders, and we can kind of predict how many orders there are going to come in and how it will affect things. And that also can mean that the markets could move in a way that doesn't really make very much sense based on the fundamentals. That, like, based on the fundamentals, we should be higher, but because of the orders, because of people's existing positions and things like that, the flow that you get is actually they unwind a position and it actually is sells, right? Because what we care about, the orders. We're predicting the orders, and then we make all of our decisions based off of that. So it's not, I would say it's very, very important to follow the news. It's very, very important. That can be one of your strongest sources of edge. The reason why retail traders dismiss this is because they don't have a sophisticated enough framework in order to predict what is going to happen based off of the news. And so they just kind of, they say, oh, well, that doesn't work. So, the market's supposed to be fundamentally efficient. That doesn't work. So they just throw it away. No, predict the orders. Right? But there's lots of other things that can predict orders too, right? Like, if there's a disaster somewhere, insurance company is going to have to sell stocks in order to pay for that disaster, right? So that could move the markets down. That could be something that predicts orders, right? There are like these algorithmic strategies, like an index fund. They want to keep themselves as reflective of the index as possible, right? So if one stock did really, really well that month, then that particular holding, they'll have more of the value of their portfolio in that one stock than that stock represents in the index. And so they're going to have to sell some of that stock or whatever. And so what they do is they, like, every month they rebalance their portfolio, right? And as they rebalance that portfolio, all of the orders that they submit into the market to reap, that's going to have impact on those stocks, even though it tells you nothing about the fundamentals, right? Again, you're predicting the flows, right? Or one of my favorites is gamma, right? Like, we have in the S&P 500 these market makers, and they are selling options. And one of the things that happens with options is once an option becomes in the money, the further it gets into the money, the more it makes. So it's not like You ever looked at these profit graphs that are like, you know, here is the strike price. You're buying a call, and here's you make money, and here's where you are profitable, right? And we say at expiration it looks like this, okay? But at the current time, you know, if we were just to buy and sell it right today, the curve actually looks more like this. It's actually a curve, right? And that's because of gamma, and gamma reflects the degree of curve in there, right? So when an option starts to become profitable, the person that sold the option, they own the stock to hedge themselves, right? But because of the gamma, they might have to buy more of the stock. They might have to buy more of the stock in order to be perfectly hedged. And so you can get this situation where some buying will actually prompt even more buying because of all of the market makers compensating for the gamma. So that's gamma, and current positioning could be something that you could predict future orders from, right? And what we do is we look at all of the forces that are out there and all of the things that we know that might predict orders and combine them together, and then see if there is some sort of net imbalance that will very effectively predict the orders for that day, and then we take a trade based off of it, right? So, for instance, you get a piece of news, okay, and it tells you something about the economy, and then the market kind of moves up, but then it like immediately reverses and it goes much further. What's going on? Oh, well, the market did react to that news and people did buy on that news, but somebody had to sell for the auction or whatever it was, and that was, you know, more orders. And I have to be able to come in and be able to say, okay, this news is this many contracts, but this other thing that I have is this many contracts, and that's going to end up mattering more. You could do this all quantitatively, but that's kind of difficult, and we can kind of use our intuition. We can use those neural networks in the front of our brains that when we watch all of these things day to day, we can get an idea of how much flow is going to come in, and we can kind of make a judgment to know in those exact moments when there's enough of an imbalance that it's worth taking a trade. That's how I'm able to come in and say, okay, we're in a range. It doesn't seem to be doing anything. There's no news. It broke out of the range. I'm suspicious. I think it's going to come back into it. And that's exactly what it did. And then after it came back into the range, it's bounced right back up here again, which kind of suggests to me that we're in a relatively balanced market, right? It's acting like there's like a huge imbalance, and then there isn't. They're trying to trick you, right? They're trying to convince you that there is something, but there's not. But because we know what the forces are that are out there, we're able to make that determination and try and call them out on their bluff and take the reversal trade. Are they absorbing like crazy at 43.94? Okay, yeah. I would say that in the S&P 500, there is a decent amount of absorption. Now, for you, Brando, because I know how long you've been around and everything, I'd be careful because for the past few months, we've been in a negative gamma environment, which is to say that when we get a move, the market makers have to kind of go with the move and buy even. So if it moves up, then they have to buy, and that exacerbates the move. We are now in a long gamma situation, which is the more typical situation, which is that once, you know, when it sells, they actually have to buy to adjust for themselves. And that constrains volatility. So I would expect to see more absorption at highs and lows in the S&P 500 than you're probably used to, because volatility is contracting. Right, so I just told you something about the flow. There you go. That we can use to kind of as a guide for how we're analyzing what's going on. Do you see how it's, because like what people want to do is they want to come in and say, here's an iceberg, that means I buy, right? And then you try doing that and it doesn't work, and some people are like, well, maybe order flow doesn't work. But if you listen to John Grady, he always says this, the context that what matters. And then you're kind of like, well, what is context? Okay. Well, what context is what are the flows out there? What are the flows that we are expecting, and what are the flows that we actually get, right? Because if I'm coming in here, I'm expecting that the flows are relatively equal, and I'm getting a lot of absorption everywhere. Okay, and that's what I'm expecting. But then all of a sudden, I move up 6 ticks on, with no absorption. That's very different from what I'm expecting. I'm immediately going, okay, something's changed. There's a flow out there that I wasn't anticipating, or that just showed up from news or whatever the deal is, and that might provide an opportunity for me. No, you're right. They did. We did. There was iceberging at 43.94. Yes. I'm just trying to explain why you might be seeing that. Kind of looks like they want to rotate around. I mean, point of control is 43.97, so right now they're kind of doing this. Right. Maybe they'll break out and move back up to highs and do this and then come higher. My read right now is that based on the way that the flow of funds, CTAs, all of these things sort of go, is that given current dynamics, that you're likely to see the S&P 500 continue to bid into the end of the year. So that's why if I was going to take a trade, I would be looking at like this range and be saying, okay, so we got like a little bit of a hole right here. I would be trying to buy 43.95, scalping this range with multiple contracts, and then in the hopes that I can let 1 or 2 contracts ride on it coming all the way back up here. And I might take one off at the high and then let the other one ride. Because my longer term view on the flows is that they're going to buy in the S&P 500, right? I feel like I'm giving tons, like I'm giving you this stuff and you're reacting like positive to me. I feel really good. Like I'm really helping you guys understand this, but because I think it's a really hard thing to kind of say, like, again, there's culture, right? So in trading, a part of that culture is just like technical analysis and all of the things that they're, and basically what I'm telling you is that the model that retail traders gave you is bullshit. Right? You need to build a completely different model. And that's hard. You have this thing already, you have these cells in your brain already configured a certain way, and now you're telling them that doesn't matter anymore. You need to completely reconfigure yourself, right? So all of the stuff that I'm telling you, hopefully it makes sense, but you're going to have to come in every day and analyze the market within that context in order for your brain to start making the connections and configure itself correctly so that you can actually analyze this and actually be effective at doing it. Thank you very much, Brando. My journey with order flow and market microstructure and knowledge of the market has grown very well with you and the Discord. That's good. The thing that I think is so cool about the model of markets that we have, because of course there's always going to be like new pieces of information that might mean that we have to update or even replace certain parts of our model, right? But I think the thing that, like, once you get all of the pieces together and you look at it, the thing that I think is really encouraging about it, the thing that like it gives me a lot of faith that, this is a way to trade that's going to get you further, is that you can analyze the market and it actually makes sense, right? Because every other way of analyzing the market basically comes down to the market will do something that you don't expect, and we don't have any explanation for it. It always comes down to that, right? That's why so many people go to technical analysis. Is that they come in and they say there's no way to explain it, so we just trade our patterns. Except for that your patterns don't work either. So how do you explain that? Right? But with our framework, all of these perplexing moves, there's explanations for. And we can go and we might have to do some digging. We might have to look into the news. We might have to look at what analysts on the desks that report what kind of flows they saw and everything are doing to figure out where the flows came from. But then we can always explain it. We can always explain it. And all of these seeming contradictions in markets about the market is fundamentally efficient, but it's not, and they're all resolved by this framework. It's because the orders are what matters. The market is just the price that you see is just the end result. It's just a function of the orders that were placed into it. So to really understand what happened, you can't just look at price. You have to look at the orders that were placed into it, and if you can, why those orders were placed. Okay, do you use market profiling in your trading? Not the way that you would typically talk about market profile. So the way that you would typically talk about market profile is, I'm here in the S&P 500. I want to buy because I don't know why, but I don't know why they would decide that. But they might say, there's a change in the market profile here, and there's change one here. So if we move up, I want to get it back up to here, and it's going to do that, right? Well, why do these bumps in the profile happen? Goes back to what we were talking about the square root law and liquidity holes, right? The market will do this, and then they'll kind of reach the maximum impact of the order, and then when the order is done, you'll have this short-term regime change that goes like this, right? And then when you're looking at cumulative delta, it'll be like this. It'll be really, really strongly up, and then it will still be up, but it will be much more gradual through here, right? And it's in this, even though it's less volume in this area, like at a time, it's there for so long that you actually end up executing more volume in through here, right? So these areas tend to be like the point of controls, the spots that stick out on the volume profile. And you're talking market profile, okay? Same difference. I mean, I understand the difference between them, but like in practice about how people try and use them, it's basically the same. But it's the same thing. It's there for a long time, so it will be the point of control for the market profile too, right? Because it's spent so much time there, essentially. Okay. But the thing is it kind of that area forms because basically market makers don't want to provide liquidity in there, right? Once the market is healed, that price doesn't have any significance anymore. So if it's been more than 45 minutes, I don't care about it anymore. I would care more about like a really even number like 108 even, for instance, we're talking about. So, the way that a lot of market profile people will do it is also they'll hold these critical levels. They'll say, well, the point of control yesterday was this, so we're going to go back to that point of control. And the way that they'll justify that is they'll say, well, my statistics say that we will revisit the previous day's point of control 60% of the time. And my counter to that is, well, just based on volatility, most prices are likely to be visited 60% of the time. That's what volatility clustering means. Doesn't mean that price has any significance. I am instead going to say, what are the flows going to be? Do the flows suggest that they're going to be long or short? If they're long, then I'm going to come over here and I'm going to look in the order flow for evidence that I'm seeing that large meta order long as a confirmation. And if I see it, then I get into it. Or like today, I was thinking maybe short. So I kind of saw a fake breakout and then said, oh, okay. Maybe I'll see that meta order sell come in. I started to see it. I went with it. It actually did happen, but it wasn't as big as I thought. So it didn't make a whole lot from it. Right? That's the difference with how I trade. Jigsaw is around 500 annually, correct? Or did you pay for a higher subscription? Okay, so on Jigsaw, there are multiple subscriptions or multiple options. The difference between those options is just the education that is provided with it. Okay? So 95% of the people that buy Jigsaw, especially through my affiliate link, just buy the base level subscription, which does have some education with it, by the way. I've never done the other one, so I don't know how valuable that education is. I personally, I feel like I'm teaching you a lot of stuff that you won't get anywhere else and is more valuable. So I'm not convinced that the other tiers are actually all that worthwhile. Okay, but I would just do the base level subscription, which is it's around $500, right? But it's not annually. That is a one-time. So you pay $500 one time, and then there's a $50 a month live trading license. So if you're only trading sim, you buy the $500 and then you just trade sim. But if you want to place live trades, then you have to spend the $50 a month. Okay. It sounds like a lot, but most of the platforms out there, you're spending $30 to $50 a month on anyways, and they just kind of present it differently so that you don't realize that you're basically paying a monthly subscription. Right, like that's what Sierra Charts does. Is that they say, oh, you need to pay $50 a month to get this data, but then actually they charge the exchange fees on top of that, and so it's actually that $50 that you're paying is actually just the same as Jigsaw's live trade subscription, right? Does that make sense? Anyways. Well, by the way, did they make a new high? They did, by a tick. Only by a tick. But now they're starting to push a little bit more aggressively. So now this gets really interesting. Because what I'm seeing here is that there has been some buying come in, but it's very much so on the long end of the curve. The 30-year came up really strong and dragged the other two with it, right? Because the 30-year, the previous high was like right here, whereas the previous high is like right here in the 10-year. So, whoosh. The key, the reason why I point that out is because the flow that we're seeing that's moving them is basically a spread trade. It's a strong change in the spread flattening. The spread is flattening. And there's certain ways that plays out. Sometimes that means that then after this goes, then they kind of revert back and like, you know, they'll all come back, but then the 30-year won't come back as much. Or sometimes the 30-year just drags them through. But in this situation, I would expect it to kind of sputter out. But it also means, the other reason why that's important is because when I come and I look at the chart, right? Remember I said I want to see like auto-correlated order flow? Well, what do you see right here in the 10-year? It's pretty mixed, and if anything, it's to the downside. But we're buying, right? So that doesn't make sense. Well, it's because the buying is coming from the 30-year. So we have to be able to look across the curve to understand the flows in that instance. That's more advanced. Looks like ES is working out how you were expecting it to go. Oh, I wouldn't say that yet. I mean, so what it's doing right now is it's giving you a good price, right? It's giving you a good price to buy within the range at least. So we could buy it here 43.94, but for me to be right, we need to be back above 4,400. I'm kind of curious though. Well, we're seeing the dollar weaken here. So the dollar weakening has generally been supportive to treasuries lately. Oh, that just reminds me of this huge rant that I wanted to go on today, but I didn't even get to. There's this creator. She's oh, what is her name? I can't even remember her name now, but she's from the Young Turks, basically. She's like their economist for the Young Turks now. And basically, her claim to fame is she went to school for economics and then didn't do anything with her economic degree. Well, like most people that go to economics, by the way. But was, you know, So now she's like, I know better than central banks and so on and so forth because I have an economics degree, basically. And she is a very strong supporter of modern monetary theory. Ugh. So yesterday, it's funny because when interest rates were low, she was complaining about it. And now that interest rates are high, she's complaining about it. So I tell you, these ideologues, it doesn't matter what the interest rate is, they have a reason to complain about it. So the reason they're complaining about it now is, well, a higher interest rate means that banks make more money. We can't let banks make more money. Are you kidding me? We got to do something about that, right? So her solution to this problem of banks making too much money is to just not have treasuries. Basically, print the money. I don't know how you distribute it. I guess you give it to banks and banks distribute it through loans still, but there's not treasuries anymore that banks make interest on at the expense of the government. Okay? Dumbest idea I've ever heard. like this one was like shockingly bad. Yeah, I don't think she thought this through all the way. So what would happen if that happened? Well, I can tell you, like we do flows, right? Here's the flow that if they did that, here's what the flows would be. The dollar would sell. Oh my gosh, would it sell? Because people, a lot of the money that we have here is like they sell the Japanese yen and buy the dollar so that they can come and buy treasuries and get a better yield on their money because they don't get any yield over in Japan. So they come over to the United States, right? So there's a lot of money that's over here only because of the interest rates. So if you don't have treasuries anymore, all that money is just going to leave. And it's really going to leave because everybody's going to want to get out of the currency. It's because they know that it's going to fall. Yeah. It would collapse your currency. Totally. It would be so awful. Right. And then even if you were able to go in some perfect world where like you know, we're able to just like make that change immediately without having to deal with all of the fallout of the change itself, just to say what would happen after that. Okay. Can you like just, you know, print more money to fund everything that you want and then take more money back out in taxes or quantitative easing and just manage it that way without having to have treasuries? No, I don't think you would, because the treasuries are kind of like the market's like cap on what's going on. Without that, there's absolutely no confidence that the currency will be managed appropriately. Basically, you know, and a large part of it is you're leaving it up to Congress to manage it. And they're just going to borrow more money. So either way, you're going to get your currency is going to weaken and punish you for it. It was such a bad take. I couldn't believe it. I was like, why does this person get attention? Why are they on the Young Turks? Because they're so, it bothers me so much, guys. It bothers me so much when we see people that are just spreading outright economic ignorance out there in the public, and they're the ones that become popular. Because I feel that we have a very strong problem in the United States with education on the economy. A lot of people just don't understand it. Because you get all of these politicians, they're in office. Oh, we're having a problem with inflation. I know what we should do. We should give people more money so that they can deal with the inflation. Really? They don't teach this stuff in school. Apparently they don't, because the politicians don't know it. Maybe they do know it and they just want to spend the money anyways. I don't know. Okay. That's my rant. I gotta get going, guys. I will see you. Well, they kind of came back, but it kind of looks to me like that the balance is maybe in favor of the longs, if only because of the flattening in the curve in the 30-year. But we have a bond auction today, so don't forget that. And we have Powell speaking, so we'll see how that all turns out. But I will see you tomorrow. In the meantime, stay excellent, team.